Hello. Hi, very well, thank you. Channels anyway, aren't they?
Well, it's an impressive facility. It's all the experience we learned it.
Change. Ladies and gentlemen, please, can you quickly come in and sit down? We're already running late, as is the way of things at the World Economic Forum, and I'd like to expedite proceedings as quickly as possible. I'm not going to spend too much time on formal introductions. Anybody that knows me knows that that really isn't my style, and since we have a cast of thousands today, I don't think we need to waste any time introducing these gentlemen. You all know who they are. The title of our plenary session is the Global Economic Outlook, what economic shifts are taking place in the global economy and what are the dangers and opportunities in the months ahead. I think in addressing that, we really need to start from here. And I think it would be useful to use what's going on now as a basis for getting into that visionary thing about where we're going down the road from here, because I think having done a couple of TV shows here already this morning or over the last day or so, it's very clear to me that uncertainty rules and people are looking for answers, and not many people are delivering answers at this point. So I'm hopeful that the gentlemen on stage with me here will all give us the benefit of their particular expertise and perhaps share with us some insight and help us all learn something about how our futures are wrapped up in the development of the global economy going forward. I'm just going to pick people out in no particular order, address a question, and then ask them to make some comments, and then I'd like as many of you in the audience as possible to get in the 60 minutes that we have available, because you will bring a unique insight yourselves to this discussion. Stephen, if I can start with you at the end of the row here. What on earth is going on in the domestic political arena in the United States? The world is looking for guidance from the policymakers in the US, and you can't even get a $700 billion package organized and delivered to the global economy.
Well, Geoff, far be it from me to defend the brilliance of Washington. But you know, we don't have a particularly pristine political process to deal with crisis in America. And just to back up, I mean, this in my 35 years as a professional economist, this is my 5th recession and my 12th financial crisis. And every one of them feels unique, and when you're in the midst of it, you can't see the way out. The good news is we've seen the way out of every single one of these, and I remain confident that the United States, despite the insanity of our political process, especially in a presidential election year, will rise to the occasion. The alternative is too dire to consider. We've got to put together a package within a matter of days that I think is large, bipartisan, and quick in its impact in unclogging the arteries of our credit system. If we don't, we and then the rest of the globalized world will be in a serious difficulty. We need a fiscal response, we need a monetary response, and as I said, it needs to be large and quick. If you stayed up most of the night as I did this past night, you didn't wake up with a lot of confidence that that's where we're going to get. But I do think we will get there. It will be around the broad outlines of the Paulson-Bernanke plan. Please do not call it a bailout. This is not a bailout. This is a bridge loan to take distressed assets off the books of financial institutions to then allow the good bank, bad bank model to work. The government takes on the bad debts, the good bank will then begin operating again, and then over time we can restore confidence in the counterparty risks that are required to enable the system to get restarted again. The question that we need to address is, once we get through the crisis, what's it going to be like then in the markets and in the global economy?
Peter Mandelson, can I bring you in on this? Hank Paulson was, it sounded to me, desperately appealing for a global coordinated response, both from governments and central banks at a fiscal and a monetary level. Could you give us perhaps some insight on the European perspective to this, whether you think that we will get that kind of response from Europe, and given your trade hat, maybe we could ask you just to talk a little bit about protectionism. Is it increasing? Why are the sovereign wealth funds being prevented from buying assets? Why has the Doha round failed?
God, those are a lot of big questions.
We only have an hour.
And you only have an hour, so I'll just take a mere 50 minutes of your hour. Look, the European view is very clear. We've got to restore the financial system to help. We have to do everything that we can to put Wall Street back on its feet. I mean, we are obviously less exposed to the immediate sort of financial crisis, but we're not insulated from its wider repercussions. I mean, the credit squeeze that is unfolding, the confidence that is not, the recession that is growing. So we're all in this together, and we don't feel any sort of sense of distance or disengagement. We want to help put things right. I mean, none of us quite know why Wall Street got so drunk and who was passing around the drinks. We know that markets depend on the people who work in them and the regulators who supervise them, and there was failure amongst some of those people and some of those regulators. I think our view is that the capital market system fundamentally is not flawed. We're not looking for some alternative, and I hope people in the emerging markets, in China for example, are not looking for an alternative to properly functioning capital markets. But what this crisis does, and in a sense what globalization is doing, is changing the ball game in exposing the need to build up models of governance which allow freedom, dynamism, that essential source of strength that financial and other markets provide for the global economy, but at the same time are adequately, smartly supervised, where we have proper surveillance, where we can have early warning systems installed as well, so that we know when things are going wrong and can come together, central bank, governors, ministers, regulators, to put things right. Now, you asked me about the Doha round and protectionism. Let me just put a very simple proposition to you, if I may, Geoff. The openness of the global economy, the openness of markets, trade flows, have in successive decades and generations depended on preceding world trade rounds being properly negotiated to a successful conclusion and putting in place new openness, stronger trade rules, lower tariffs that will ensure that in the succeeding 10 or so years, trade grows. We are in danger of seeing, for the first time in the history of world trade rounds, the absence of those necessary measures, that necessary further openness, that necessary strengthening of trade rules, that necessary lowering of tariffs that will ensure that international trade continues to grow in the future. And in my view, we will not only, if we fail finally, miss the opportunity to put in place those necessary changes, we will have failed to put in place a very, very desirable insurance policy against protectionism in the world growing. We will have failed to put in place that ratchet to stop the global economic machine rolling backwards under the pressure of growing protectionist sentiment. So there is a great deal at stake. In my view, if the Doha talks finally fail, it will have repercussions throughout the multilateral system. It will, for example, be much more difficult to resolve those cross-cutting issues and interests that are at play in the post-Kyoto negotiations leading up to Copenhagen at the end of next year. We have the similar issues, similar players, all involved. If we can't get it right in the trade talks, be rest assured we will find it equally difficult to get it right in the post-Kyoto talks and other talks where the multilateral system and process needs to work for the benefit of all of us in the world.
Peter, just very quickly, what's come out here for me is that a lot of people believe that the light regulatory environment was wrong. And that is what has led us ultimately to the financial system being damaged by banks that have taken risks with capital and other people's money. Do you think, obviously we're looking at what we need to change here, do you think it's the success of those financial organizations in lobbying for lighter regulation that has got us here, or is it the fault of the politicians that were too easily persuaded to allow some of these things to take place? Who do we need to change, the politicians or the way that our business leaders operate?
I think we have to improve the way in which they interact. I mean, for good or ill, we have the politicians and the business leaders we have. Sorry about that, but there you are. We have to, they have to talk to each other. I mean, the business leaders and the financial institution or managers need to understand that the management of risk has got to be undertaken more smartly. The surveillance of that system of risk assessment and management has got to be got right. But we also have to have in place, as I say, as well as proper surveillance, early warning systems to, have lights flashing on and off so that we can see what's happening when things are going wrong and bring together the right people at the right time to make the proper response. So to me, it's not the sort of markets that are fundamentally wrong. It's not globalization that is fundamentally wrong. It's risk that we've got to manage better. None of us are insulated from what goes on in the global economy, and thank goodness we're not. If we were insulated totally against, the risks involved in globalization, we would also be insulated against the rewards that we get from globalization. But whilst enjoying the rewards, we've also got to manage the risks much better, and that's the lesson we have to learn. Not by sort of smothering the global economy and the financial market system with layer upon layer of regulation, but we need smart regulation, we need smart people operating it, and we need politicians to know when they have to step in and when they have to keep out. And we've got to learn those lessons.
Tom Enders, if I could bring you in here. I talked to a businessman yesterday who said that he can now source from Europe as cheaply as he can source from China, which was a wake-up call to me. You're just about to open an operation or a line here, I think, in Tianjin. Could you share with us, as somebody who actually has to run a business, what your expectation is from China and the BRIC economies in growth terms over the next 18 months, 5 years?
Well, Geoff, it's even beyond 18 months. What we see in the global aviation business, and that's in years, is that the growth markets are increasingly in Asia and in the Middle East, obviously. And we project that, for instance, in China, there's a need for up to 3,000 large aircraft, 100 seats and larger, in the next 20 years. That will make China almost as important in terms of market size, or on par with the United States, that is today the largest aviation market. So our access to that market is obviously to also source increasingly in these countries. I'm tempted to, or I'm hesitating to use the term emerging economies, talking about countries that were emerging perhaps 10 years ago, that are, the term new champions is probably much more appropriate, that are not just becoming a great market, but increasingly also a pool for skills, for talented people, engineering and manufacturing. And as it is true that the prices, the costs are rising in these markets as well, overall, and we are in an industry that is long-term investing in our programs, believe that we have to gain to really deploy our resources global. Admittedly, that brings sometimes strains with our stakeholders, for instance, in our case, back in Europe. Politicians love us as we are today, or as we have been. 96% of the employment in Europe, 75% of the procurement in Europe, the rest almost all in the United States, and selling these aircraft all over the world. But we have understood some years ago that this is not the world we can preserve. In order to be successful, like other industries, we have to spread our wings, so to say, and deploy engineering-wise, manufacturing-wise around the world. That doesn't mean we're going to open up final assembly lines all over the place. Tianjin final assembly line, which we open tomorrow, in the presence of Prime Minister Wang Jiabao, is the first final assembly line ever we've put out of Europe. And it just signifies the importance to us of the Chinese market and the Asian markets in general. So we are in an industry that projects, wherever you have our projections, Boeing's projections, GE's, a lot of growth in the next 20, 30 years. However, we know that we have to share it. We can't keep it all back in Europe or in the United States. And we're settling here for the long term. In the current environment, if I may add that, of course, like all other industries, we ask ourselves, what does that mean for funding? The financing, for instance, of our aircraft, the financing airlines are in need of for the aircraft they acquire. Will it dry up? Will it become more difficult? Well, I don't want to speculate about that, just to say here, and that's kind of a sales pitch, that I would hope that people understand that aircraft and other tangible assets are real assets, and would tend to invest in real tangible assets rather than into artificial, sometimes highly complex financial structures.
Okay. Thank you very much for the comments. Mr. Jiang, if I can bring you in. Fitch recently expressed some concern about the clarity of performing or non-performing loans as reported by the Chinese banking system. Clearly your auditors will have a pretty good idea of how things are, and they've not raised any red flags, so let's go into the question on that basis. But what do you see the near-term economic threats as being here in China? We are worried about the management of inflation, which appears to be embedding itself in the Chinese economy. Could you talk to that and perhaps give us some idea of how you see Chinese growth over the next 3 to 5 years?
See, when you talk about the quality of Chinese banking industry, actually, our auditors are the eligible people to answer your question. Present today, we have our auditors of my bank is a U.S. company. Is Andrew Young, and they will be giving this answer in a professional way. China's economy has been maintaining, in the past 30 years, a very rapid growth, average of 10% annual economic growth. I think it will continue to sustain such a rapid growth because China's industrialization and urbanization process is in progress, is evolving, and also this year, like the global situation, we have had some kind of a price hike. In the first half of this year, the price hike was relatively fast. However, very quickly, the Chinese government adopted macro control measures in monetary policies, in many other areas and measures, in a very efficient and timely manner. Right now, if you look at the thing, the inflation level is coming down month after month, reaching in the latest report, monthly report, is about within 5%, is 4.9%. In the neighboring countries of China, the emerging markets, the Chinese government controls inflation, the capability and the level and the measures turn out to be very effective. I believe this year's Chinese economic growth will still be in a good manner and healthy manner. Inflation will be controlled at a relatively low level.
Economists in the West, and I include Stephen Roach among these, have thrown around words like stagflation in relation to the Chinese economy. That's not to say, Stephen, and please correct me if you want to, that you're saying that it will happen. But there is some concern, I think, about the way in which inflation is being managed at a policy level.
Well, look, let's forget about inflation. I mean, we're in a crisis right now with significant risks of a major weakening in the global economy. So in that environment, Geoff, inflation risks are a story for another day, and the real risk here is that if we don't take forceful and effective action to get this crisis under control, we're going to be talking about deflation.
You say that the oil price rose $4 last week. Why? We all know that the global economy should be slowing down, so why are we seeing commodity prices rising even in this environment?
Look, I have no idea what drives the price from day to day or week to week. There's a lot of randomness in it. What drives your viewing audience up or down in a given day? There's noise there, and there's a relationship between movements in the dollar and oil prices that we can sometimes try to draw out inferences on short-term movements in oil prices. But in a weaker global growth environment, which is what we're moving into right now after a 4.5-year boom, the likes of which we haven't seen since the early 70s, prices of economically sensitive commodities, oil, base metals, other industrial materials, are going to move lower for a while, not higher.
I don't want to have a row just with you on the panel, but Mr. Jiang here thinks that China's going to grow at 10% from here on in. That's not a global economic slowdown. That's a slowdown in Western economies, but not in BRIC economies. Is Mr. Jiang wrong?
No. I mean, he's talking about a trend, and knowing Mr. Jiang quite well, that around a trend there's going to be some cycles. And China's actually been above that trend for the last few years, growing at close to 12%. And now it's back on that trend. The latest number for Chinese GDP growth in the middle of this year was 10.1%. The risk is now it'll go below that trend for a while, but that doesn't mean the Chinese economy is collapsing. It just means that it is linked up to the rest of the world, and with external markets in China, for China likely to be growing more slowly, the export piece is likely to contribute less to Chinese economic growth for a while.
Miyauchi-san, if I could bring you in at this point, you and I had an interview earlier this morning, and you were very pessimistic. Can you perhaps share with us some of the reasons why your outlook coming out of an economy that's been in the funk for 2 decades is so negative? Surely our policymakers in Washington are going to help us deal with this current crisis, aren't they? Or are they doing the same thing the Bank of Japan and the Ministry of Finance did?
Well, I'm rather old man here, and I remember when we had bubble burst days that started back 1990s, and Japan slowed down the economy next more than 10 years. So when a bubble has burst, I think the role of government is very important. Japanese government took several years until they admit we are in a very serious conditions financially. But maybe knowing that experience, I'm watching very carefully what is happening in the U.S. now. I think U.S. government is taking very, very quick reaction to this turmoil. But what they are trying to do is to buy non-performing loan from the banks, and as Mr. Roach mentioned, this is temporary liquidities given to the lending institutions. But what would happen next would be the capital shortage at the part of the financial institutions. Who will provide capital for those institutions is a big question. If we can still expect those money come from sovereign wealth fund or not is a question. Or some private equity fund will provide capital for the ailing lending institutions is also a question. This is what happened in Japan. In case of Japanese banking crisis, at the final days, government had to put up their money and nationalize large banks. Some of the banks still have a borrowing from the government. So probably sometimes next year, the real crisis would be if a government is ready to provide a capital base for those problem banks. So I think my view is this turmoil will last probably more than most of the people expect. So I'm sorry to say I belong to a very pessimistic school, but I think seriousness is much more than we had in Japan. Japan, the turmoil is only limited within Japan. This time, overexpansion of the market product is spread all over the world, and everybody get affected because of the real borderless type of financial market. So that we should not become very optimistic about what quick action taken by the U.S. side will give relief in a very short period of time.
Look into your crystal ball for us. When do you believe that the global economy will start to emerge from this?
Well, this is a question I really like to get the answers from somebody else. But I hope to see some light at the end of the tunnel, sometimes end of the next year.
End of next year. Could you please raise your hands if you'd like to participate in the discussion with a question or a comment, and then we'll try and get a microphone to you. Are you just stretching over there, or is that a hand going up? I'm not quite sure. Can I see it? Yep, right at the back. Can we get a microphone to... If you could stand up, maybe that would make it easier for the microphone person to find you.
Hi, Sayanta Basu, Dubai Financial Group. Question to Stephen. How much do you think the current crisis is taking liquidity away from the market? The first question. And the second question is, do you see U.S. going into a Japan-like recession, which is a multi-year kind of very low growth environment? Thank you.
Let me just answer the second one, because I think that's really pertinent to the discussion that we just had. The main event for the U.S. is about to switch, at least in terms of the real economy, from an adjustment in residential construction activity to an adjustment in personal consumption. America's been on the biggest consumption binge of any large economy in recorded history. We've had 14 years of growth in real consumer spending that's averaged close to 4%. Last year, 2007, the consumption share of GDP hit 72%, conveniently double that of China. The outcome, of course, was no saving, massive current account deficit, record levels of consumer indebtedness. It was never sustainable from the start, but the longer it went on, the more you heard from the optimists on stages like this in Davos that, of course, it was sustainable because America could do anything. Well, we can't. And it's over now, because what sustained the consumer was not the internal income-generating dynamic of the U.S., but two bubbles, property and credit, both of which have now burst. So the American consumer, pardon the American expression, the American consumer is toast, done, finished. It's the biggest consumer in the world. There'll be great consequences for other nations who like to sell things to Americans that they don't need and can't afford, and that would include China. Chinese exports to the U.S. have weakened and will continue to weaken. The bottom line, though, is we're not talking about a one-year consumption adjustment. We're talking about a multi-year consumption adjustment. The 4% trend for 14 years is probably going to be cut in half to 2. There'll be years when it's less than that. It'll feel like it's a recession. There'll be years when it's more than that. It'll feel okay, but it'll be in and out of a sluggish trajectory. And yes, it will feel very Japanese-like in response to your question. But, you know, in America, we like to do things our own way, so we'll come up with an American version of Japan's lost decade.
Yes, sir.
Hi, Vijay Panusami from Etihad Airways in Abu Dhabi. The crisis we are in right now is a global one, and we hear a lot of focus on what's happening in Washington. Why isn't the World Bank getting more involved in this?
Okay, thank you for your question. Peter, do you want to take that? Anybody on the panel have a view?
Question better be posed to Bob Zellick.
Bob Zellick's not with us today, unfortunately.
Bob is not here. No, I think the World Bank is contributing to the debate, a review of issues, and is moving opinion, broadly speaking, in the right directions. I mean, the IMF has a role to need to reinvent its role this century, incidentally. I mean, the IMF, which has been sort of busy on and off supervising macroeconomic policies of the world's major economies, I mean, it now needs, I think, to assume probably a stronger surveillance and early warning system for the financial markets and institutions. I think that would be a better way, better direction in which the IMF might go than, for example, trying to sort of police sovereign wealth funds. I strongly support the code that the IMF has been instrumental in bringing into existence, but I hope we're not going to get so sort of caught up in this sort of IMF code, with the IMF turning itself into some sort of latter-day new international criminal court to supervise the wrongdoings of sovereign wealth funds. Quite honestly, you touched on this at the beginning, making a slightly provocative proposition in your opening remarks about the barriers that, in Europe and the United States and elsewhere we're trying to put up to the sovereign wealth funds. Well, I don't think we are, and those who might be moving in that direction I think are misguided. The sovereign wealth funds in the present context might better be termed saviour wealth funds rather than sovereign wealth funds, and we need to find sensible ways and a proper basis on which sovereign wealth is able to deploy its wealth and use its resources to inject much needed liquidity into the financial system. So I'm sure that Bob and the World Bank will be encouraging these progressive moves, both to restore confidence in what we have, but also to promote necessary reform in how we need to change, and that's the proper job of the World Bank.
There's a view that I've heard expressed here that the Republican government has done its damnedest to undermine international institutions that take a global view, and they've done that with the UN, they've done that with the IMF, they've done that to some extent with bodies like the World Bank, although slightly less so, and the consequence of that has been to weaken institutions that should have played a much more important role in perhaps oversight and regulation. Do you think that there is something to that, and do you think that the coming US administration should dive in with support for many of these international institutions?
Well, I think your verdict's a little sweeping and a little harsh, and I don't think it's for me to judge President Bush's record quite yet before he's even moved into retirement. I think that whoever picks up the baton, whether it be President McCain or President Obama, they have quite a challenge on their hands to remake the image and presence and sort of role of the United States in the world. I have no doubt at all about that. I think both of them, given what they've been saying during the primaries and during the race so far, will want to do that. I think both of them will bring a fresh mindset, a fresh impetus to multilateralism. Both of them will do that. And I think that will be very well received. We're not going to solve any of the problems we face, whether it be in the financial system or in adapting the global economy and our respective economies to low-carbon production. We're not going to be taking on any of these issues without a better working international system. And it's an international system in which not just the sort of G7 or G8 and the OECD will be reaching out and inviting the sort of so-called emerging economies in for a cup of tea every now and again, or a coffee to hear their views and then politely ask them to leave as we take the decisions. Their world is completely changed irreversibly and for the better. I found this, I was very struck with it, if I might just make this last point.
Very briefly.
In the World Trade Talks, the ministerial in Geneva in July. We did a lot of work, we nearly succeeded, and we may yet succeed. But what struck me in the core negotiators was how China, India, Brazil were at that table negotiating as equals, carrying their burden of the weight, demonstrating their commitment and their sense of responsibility in the way that I was and the USTR was. This is a big change, and it's timely, and it's not going to go away now. We have to build on it and make it work better.
Okay. Yep, you have the microphone.
Thank you. I'm a journalist from the Oriental Post in Shanghai. I will ask my question in Chinese. Okay.
I'd like to ask question from each of one. Based on your experience and imagination, would you please forecast in the next 1 year, under the current financial crisis, the Chinese current exchange rate will go to what direction, whether it will be helpful to this resolution of the problems?
Can I ask you, do you have a position in the market at the moment? Who would like to take that? Tom Enders, actually, it might be good to start with you. What is your working assumption on what the renminbi will be exchangeable for?
I'm certainly the last expert here on this panel, and I'm sure on the panel and in the meeting here in the plenary there are much better experts on that. We're currently on the assumption that the Chinese economy has had a little dip this year, but if we look at the measures the Chinese government has been taken and is taken, and some of it was mentioned here on the panel, and we look at the overall growth perspectives, we are very enheartened that the Chinese economy overall, and certainly for our sector, will remain a kind of a growth locomotive.
So is that stronger or weaker? I'm aware that you're not talking numbers to me.
Well, let's ask some others here on the panel. I really don't want to...
Is that a duck? Is that a pass?
Yeah.
Okay. Just so we're clear. Can I ask anybody else, would they like to make a contribution to this? Yeah.
Well, this is very difficult to guess, but I think foreign exchange is always against the US dollars. So we must think about what would happen to the US dollars. At the present moment, there is strong demand for the US dollars. So dollar is becoming strong. But at the end of the day, if government is going to put up some capital basis for the lending institutions, that will create budgetary deficit at the hand of the US government. That will give some disappointment at the time of the people who make investment in the US dollar. So it tends to become US dollar will be weakened. So that against Chinese currency, I think Chinese currency have a chance to become a little bit stronger.
Well, thank you for putting your neck on the line for us there. Stephen, I don't know whether you have a view on this. Mr. Jiang, do you want to contribute?
Yeah, I have a view, but I'm not going to tell you.
Okay. I think in the past year, many people have been speculating or predicting on stock market and exchange market. They all fail. Let's not to do any prediction over the future, but based on China's economic changes situation and the global economic situation, I believe that China's foreign exchange adjustment will be accordingly, towards turn towards those changes.
Well, to me, to be honest, but yeah, you've got a microphone in your hand.
Hi, I'm Johnson Chung from Bain & Company. A question for all the panelists. If U.S., for many years, the whole world has been looking towards the West, in particular the U.S., for direction, for growth, for consumption, for innovation. And if U.S. in the next 10 years is going to happen in terms of the pessimism we just heard, and they're going to go into 10 years of the Japanese experience, wouldn't now be time where Europe, certain parts of Europe and Asia, particularly China, step up in terms of changing the world distribution such that in the next 10 or 15 years when there will be another crisis, but we are not so dependent on one market that the fall of one market brings down the entire world. I know there are various initiatives going on, but I just want to hear from the panelists. Do we think that is enough, or is this a time where Asia, in particular China, and certain parts of Europe can actually step up and do more, such that the world is a more evenly distributed market than it is today?
Can I ask you, are you thinking of non-market activity, government-directed, or are you thinking of market-led, a natural process of evolution where these markets become more dominant?
I think it's both, because I think the market activities will inevitably be affected by the policy being made by the government agency. So I would think both the participants like banks, Chinese banks as well as the Chinese government can play a bigger role than they play today, and it will create a better tomorrow for the world, I believe.
Thank you very much indeed. Mr. Jiang, let's see if I can get an answer from you on this. What ICBC is now the world's biggest bank, isn't it? I think so. Don't you have a responsibility to go out there and spend some money and become more active in markets that maybe hold opportunity right now or look pretty good value?
This time's financial crisis, I believe, will have a big, profound impact on the future. I myself think in the recent 10 years or so, the global economy in terms of financial perspective will have major changes, major adjustments, and major reorganization. For international finance structure, pattern, or layout, a big impact will emerge. Of course, you just mentioned whether or not the United States, because of suffering such a big crisis, will have a very big harm for the U.S., whether or not in the U.S. we are going to see, people will have a weakening of the dominant force of the U.S. I do not believe so. The United States, after going through this financial crisis, American financial industry within the global stage, its dominance will still continue. But indeed, there will be some changes. I believe that this kind of regional financial strength or market, they will play a bigger or more important role. Right now, the market is very unitary. For example, people tend to ask, why everybody is holding U.S. security, bonds for so much, for so long? I can tell you, the bond market in the world, domestic, the 45% of the domestic bond market is the U.S. market, and 22 to 29% of the international bond market is the U.S. market, which means everybody work very hard to earn some profit and to buy their securities in the U.S. market, but they turn out to have purchased the, or the Lehman Brothers bonds or securities. They turn out to be that case. If we do not buy that, if we put the cash at home and dig a hole and bury all the cash, we cannot do that. So that is the dilemma for this kind of over-centralized global market. That's the drawbacks of the existing system. The next round saying, when we think back about the financial crisis, we have a financial crisis will maybe prompted by over 10 reasons. So we'll do some rethinking. So this kind of a unitary, over-centralized market is something we need to change. We need to think about that. We'll be very careful and prudent. As a commercial bank, we do not think we need to do some speculation or something. We will be focusing on strategic investment rather than financial investment. Thank you.
Can I ask you a rather crudely put question, but I hope you can give us a more eloquent answer. I'm using extremes to make the point, but my Chinese business friends are very angry about double standards they see in the West, where you can come and buy some of our toxic debt, we'll sell that to you quite happily, but when it comes to a viable business, maybe like a port or something like that, then we'll raise all sorts of barriers and make it very difficult for you to get access if you are a foreign investor or a sovereign wealth investor. Could I ask you, Peter Mandelson's hope and optimism about the sovereign wealth funds notwithstanding, how do you think, Mr. Jiang, we solve this problem politically of some countries being unwilling to sell assets? And let's face it, the French think that yogurt is a strategic asset. You can bring anything into this you want to, but do you think we need to see a change before we come out of this crisis in the way that governments react to foreign investment, whether it's from China or anywhere else?
I believe that each country has its own laws and regulations. Of course, within the scope of these laws, the foreign companies making some investment, of course, it can allow, but if the laws have some restrictions, foreign investment in this aspect, we will find it difficult. But along with the globalization, including different countries, multilateral or bilateral talks, furthering, deepen. I believe in the mutual kind of making investment restriction will become less and less. We are very happy that if you look at that recently in the United States, one of our institutions in the U.S. was getting the approval, so those are very good signs.
Mandelson. Yeah, just on that one, if I may. That is certainly a question that's very much on my mind. Will this crisis change the perception, the acceptance of foreign wealth funds in the West? Well, in the U.S., and Peter Mandelson maybe can say he's voiced his view on that, and I fully agree, but what's the chances that, for instance, in the European Union, we see a change? Quite frankly, and that's well known, I mean, sovereign wealth funds knocked in our doors in the aviation industry, in the overall industry in Europe, the United States, and so far the response overwhelmingly has not been very warm and friendly. Now, if we start from the assumption that we will lack a lot of money for years to come to fund important industrial infrastructure projects, etc., we look at places where this money is. And this is not only, but very strongly, sovereign wealth funds. So you see already major companies, European, American, touring those countries that have the funds because they foresee the need of funding. And these companies will certainly also try to persuade governments that are less open to sovereign wealth funds to open the doors here. So I would dare. I was a coward when you asked me about the way
that's a little
Chinese
harsh.
currency goes, but I would dare to predict that, yes, one of the big changes we're going to see is that the acceptance of sovereign wealth funds, certainly under clear regulations. I'm not saying this is something that should be done without any regulations, be it on the EU level or through the IMF, as Peter indicated, but we see a higher acceptance of these funds because they might help us, particularly as some of the experts here predict that this is a crisis that's not going to be over by the 1st of January. It will be with us for some years to come, hopefully not 10 years.
Okay, thank you. You have a microphone there, sir.
Atamu Kambara from Zimbabwe. It is our considered view that there are two lessons that should be learned from the current global economic crisis. The first one is that our understanding of the role of government and the role of markets must be revised. It can't be business as usual. What are the changes in terms of our understanding of the role of the government and the role of the market? The second one is that we have to shift from national governance to global governance. We can't resolve this crisis unless we define the notion of collective humanity and global governance. And also in defining global governance, we're going to chip away at national sovereignty, chip away on the essence of the nation state. Are we prepared to surrender national sovereignty in pursuit of global sovereignty?
Thank you for the question. Stephen.
Yeah, those are terrific questions. And let me be brief because we are running out of time. The role of the U.S. government, the market, the economy, we do have to learn some important lessons. They are lessons of regulation, they're lessons of supervision. They're painful lessons for those of us on Wall Street, and we talk about those endlessly. But let me just highlight a lesson that nobody talks about, and it's one that I feel most strongly about. We really need to rethink the role that central banks have played in creating the mess that we're in, especially in the United States. Peter made the point at the outset that we've had a failure of risk management. He's absolutely correct. The question is why? And I think the reason that we've had a failure of risk management is that we set the price of risk too low. In particular, in the U.S., by condoning asset bubbles, at least in the start, and then letting the equity bubble burst, we had a central bank, the Federal Reserve, that held the federal funds rate at 1% for a ridiculously long period of time that gave rise to a series of other bubbles, property and credit, and you name it. And when the price of risk is too low, people in my industry, our DNA is programmed to be risk takers. And we will take excessive risk if we are not penalized for the price in which we take risk. And now we're paying the ultimate penalty. We had a huge blunder in monetary policy. We need to rethink the role of monetary policy in an increasingly sophisticated set of financial markets. Your point on global architecture for global problems is absolutely right on. We've talked about it. Every time we have a global crisis, we always say it. We're committed to doing it, and then we never do it. The question is why?
Can I invite our other panelists to contribute? Peter?
I said at the beginning that I think that this crisis has changed the game, and we do need new models of governance. But let's understand what we're doing here. We want to sustain globalization. We don't want to destroy it. We want to create a positive politics of globalization to cement public support for globalization. I've never believed that globalization, which I regard as good and welcome, means the end of the state. I don't believe that. The globalization, in a sense, means reframing the role of the state. And the role of the state in the context of globalization, in my view, is to help manage change, to equip people and communities to embrace that change. Now, that, I think, if I may answer our friend from Zimbabwe, is how we should be thinking of the state. And of course the state will help manage markets, but not to direct them. Markets are the principal source of dynamism and strength in the world economy. We do not want to see the state substituted for markets. What you do want, though, in the way that Stephen has alluded to, is the state playing a smart role in helping to manage those markets so that they perform properly in our interests.
Thank you.
I think the last 20 years, United States tried to make economy by the two industries. One is the information, the other is finance. And in the financial sectors, they created market product. But if you think about money economy and real economy, size of real economy must go with the size of money economy. But because of the fact that market product have overextended, so that money economy exceeded growth of the real economy and overflow from the creating some very doubtful product like sub-mortgage, supply mortgage. Now it is a process of a normalization to match money economy and real economy, and I'm saying it will take a real long time. The real role of government is they misjudge the size of two things. If central government banks could recognize the money economy is expanding too much, they can increase interest rate. But Fed didn't do that, and Bank of Japan also didn't disregard this phenomenon.
Okay, very briefly, we're pretty much at the end of the session, but I just want to leave our panelists with the last word. I want two things from each of you. One is, when do you think that global growth will turn from your perspective and things will start to get better rather than worse? And what area of what is taking place now gives you optimism rather than pessimism? And let's start with you, Miyauchi-san, and we'll just run along our panel, and then that'll be it, really.
We really need real money be pumped in those with turmoil sectors. So Japanese deposit base is fairly large, and also sovereign wealth fund has a cash basis. So how to flow those real money into those difficult parts is a problem, and we should try to move those money into the US and European banking systems.
So a problem, but an area of optimism, and you've already told us you see this turning at the end of next year. Tom, let's bring you in.
Well, then is, as you say, global growth picking up again. The best prediction I heard today here in our discussion was by the end of next year. So I certainly don't have an expertise to add to that. Areas that provide, I wouldn't say particular industrial areas, I would say region. It's vitally important for that recovery that particularly in Asia, in the Middle East, and hopefully also in Europe, the economies stay strong. And that's the positive. If we think about the impact of this crisis on the world and our economies 20, 30 years ago, I think it would be far more severe than it is hopefully today.
Okay. Peter, briefly, if we can.
I think global growth will be sustained, and I hope it will resume its pace as soon as possible. But we are looking now to the larger, faster-growing economies to take up the slack. We need them to be sources of liquidity, of demand, of investment and confidence for the global economy. We look especially to, but not only to China in that respect. And I do feel slightly more optimistic actually now I think about it from the sort of gloomy state from which I entered this panel, because I think that we will see the American financial system reinventing itself. I think it will be leaner, but it could be meaner. I think that Wall Street will pick itself up and it will be firmly on its feet sometime in the coming years. And I think that we are seeing a more balanced, more diversified, multipolar economy, and we have to have new models of global governance to reflect that new distribution of economic power in the world. Okay. And I think that's a good thing and something that we can cheer and look forward to.
Mr. Jiang.
The current financial crisis and the solution to that problem and when it will be bailed out will be dependent on the policy makers and whether the policy is correct or not, whether the decisions made timely. I mean that we should quickly see the policy, and also in terms of the correctness of the bailing out policies, that depends on the content. For example, how many discounts we are going to use to buy out the non-performing loans. How would we deal with these non-performing loans and bad assets, and how could we strengthen the control over the current banking systems? And for example, those investment banks, when they switch to the normal commercial banks, they should let the society know what they are going to do in the future. Only by so doing, the confidence of the market will be restored.
Okay. Take that as an answer. Thank you. Stephen.
As I said at the beginning, Geoff, painful as they are, the crisis is the wake-up call. And one thing I truly believe in terms of my home country is that we respond to adversity. We have a crazy way of doing it. We're doing it right now. And so we will address the financial crisis, and I'm hopeful we'll come up with a pretty strong resolution of that in the next few days. But the healing process is going to take time. It's going to take years. And we can fix the financial mess, but the problem and the reality is that the real economy has become dependent on the excesses of the financial system. And so as we purge the excesses of the financial system, we're now in the early stages of purging the excesses in the real economy. That is going to take several years in the United States and an equally long period of time for the world economy, which is still very dependent on the U.S. So I think we're moving into a slower period of global growth that most likely will last through 2010. We're not going to go back to the boom years of nearly 5% global growth that we had for 4.5 years. We're not going to go back there for a long time. And I think we've got to get used to living in a slower growth environment where the emphasis is not on the quantity and speed, but on the quality and the balance of global economic growth.
Ladies and gentlemen, can I ask you to thank our panelists for everything they've done for us in this session. Thank you very much from me as well. Thank you.